Now, many people are calling what we've seen in the last week or so in the stock market a stock market crash, a huge opportunity to buy stocks, buy the dip, massive correction. These are things that you're going to hear out there, and I'm sure even the title of this video is probably something to do with stock market crash, because let's be real, guys, that does get clicks. So I'm sorry if you feel this is clickbait, but I promise you, if you stick around for this video, you will get some value out of it, because I'm going to share you my perspective and kind of what I'm focusing on during these uncertain times, which may be fearful for some. So here's where the indexes sit today. We can see that this week they have all lost value. However, it's really not all that bad. The S&P is down over 1%, the Dow is down under 1%, and the NASDAQ is down a whopping, just being sarcastic there, it's down 3%. So can we be real just for a second here? 1%, 3%? Guys, this is not a stock market crash. However, that being said, it does not mean that individual stocks, particular companies, haven't seen a crash in their stock prices, because, oh, trust me, some stocks, which, I've talked about on the channel before, are down massively this last week. Peloton, it's down 12% on the week. Tesla, our favorite stock on here, down 11.5% on the week. NIO, one of the stocks you guys absolutely love, down 15% on the week. And then, of course, Palantir, down 20% on the week. Yes, these stocks did see a crash. These stocks are definitely in a correction. They've lost tens of billions of dollars amongst them. And it is definitely worth, keeping an eye on these stocks. However, on the flip side, what we see is the complete opposite. Wynn Resorts, it's up 6% in the last week. JPMorgan Chase, up 1% in the last 5 days. Caterpillar, industrial giant here, up 3% in the last 5 days. Starbucks, one of my favorite stocks for the restaurant play, is up nearly 6% on the week. Even Carnival Cruise Line, guys, a stock that got rocked in 2020, is up nearly 5% this week. So essentially what I see is happening is that money is rotating. I've discussed this in a previous video. I think that high growth stocks, high flyers, massive winners in 2020 are seeing, profit taking. Investors are like, I think it's time to take money out of these stocks and put it into some of these stocks that haven't seen a whole lot of gains in 2020, like the banks, industrials, cruise line stocks, resorts, hotels. All these kind of stocks didn't really see too much happen with their stock price last year. And this is just the regular cycle of the market. Money moves from big movers and people take profits and, 50, 100% gains. They take it, they flood it into stocks that are cheap right now. And then they will probably realize, another 50 to 100% gains over time with these new stocks as well. That's just how the market works. And the sooner you realize that, the better of an investor you'll become. The thing is, though, when we see, one part of the market, like high growth stocks, for example, in 2020, even the beginning here of 2021, when you see them just shoot up week after week, up, 4%, 5%, 10%, everyone's making money, everyone's doubling their cash. We see that happen time and time again. Boom, the market gives you a reality check, stocks snap back, these stocks get hit the hardest like we just saw, and that's just how it works. Now, if you were heavy on EV stocks, SPAC stocks, speculative stocks, high growth stocks that are pre-revenue, high growth stocks that just cannot justify their valuation, like $1 billion in revenue but a $50 billion market cap, yeah, those stocks are going to be the first ones investors are like, I'm taking profits off the table. I'll come back to this when the valuations make more sense. You were definitely part of the group that was hardest hit if you own majority of those stocks. And I don't want to scare you, but just think of it this way, okay? The NASDAQ, which is where most of these stocks sit in, was down 3%. Can you imagine, just imagine, if the NASDAQ was down 10, 15, 20%? How much harder would your stocks get hit? Because typically when you see the NASDAQ down that much, these stocks amplify those gains because they're higher risk, higher growth, higher reward, right? And investors will flood out of those names at the first sign of uncertainty and fear. That is just how it works. And I've seen that happen so many times in the stock market, which is why I always control my risk. And while I invest in some of these riskier companies, I have a position in Peloton, in Neo, in Tesla. These stocks I would consider are still higher risk compared to some of the more traditional businesses, but I manage those positions. My Tesla position, for example, is one that I got into a couple of years ago at a cost basis I'm extremely happy with. And while my profits go from maybe up 1,400% to maybe up now 1,200%, it's still a massive profit, and I don't have any reason to sell that stock. I'm just gonna ride it out. But for those of you that got in, say, in the last month, last 2 months, you are probably seeing big red losses in your portfolio, and it's normal, but you got to be smart about how you position yourself here. Just remember this one key thing that I constantly remind myself in the markets. If something is too good to be true, if something is just too easy to make money in, and I'm talking quick money, like something where you can double your gains in a week, it typically is a sign to be very cautious. Maybe you can have some exposure to it, but be very controlled with it, and just don't go all in, because if for whatever reason the external factors push that stock down, you will get wiped out. A lot of people got wiped out during this last 5 days, and we barely even saw a market crash. So just keep that in mind. Be smart about your money. You worked hard for it. Don't gamble it away. And just remember that the most successful investors are ones that just focus over the long term. Okay, so now let's talk more about me. What am I focusing on here with the stock market? More specifically, what kind of stocks am I really looking at? The key thing that I want to get across to you is during these times, you got to focus on the best of the best. I'm talking the best businesses, the best brands, the top earners in their industry, the #1 performer in that industry, just overall amazing companies. Those are the ones you want to focus on and put money into. The reason is because during times like this, what do investors do? They go back to the #1 thing, which is fundamentals. They go back to things like balance sheets, income statements, cash flow statements, 10Q, 10K reports. These are things that start to matter once again, because now all of a sudden it's like, I don't know what's going to happen with the stock markets. I want to put my money into safe companies, and companies like Facebook, Pepsi, Lockheed Martin, Apple, Amazon. Pick your favorite blue chip company. These are companies that, may see their stock price dip a little bit, but when you see those opportunities, you buy in at that dip, and then over the long term, you have a very high probability of making a good amount of money. Yes, I'll be straight up with you. You're not going to see your money double in a week, 2 weeks, a month in these kind of companies. It's just not going to happen. Do you really think that Apple is going to go from a $2 trillion company to a $4 trillion company in a month or two? Very unlikely. Do you think Amazon will go from a $1.5 trillion company to a $3 trillion company in a month or two? Unlikely. Anything's possible, but unlikely. However, you ask yourself the question, is Apple a good company? Of course it is. Is Amazon a good company? Of course it is. Are they producing a ton of profits? Yes, they are. Are they growing revenues? Yes, they are. Will they be bigger companies in 3, 5, 10 years from now than they are today? Absolutely. And that is where the mindset has to be if you want to truly be an investor, not a speculator and a trader. And I don't want to bash people that do day trading, swing trading, speculative trading. I dabble in spec stocks. I dabble in swing trades every so often, but I always control that part of my portfolio. It's always below 5% of my overall portfolio worth. And that's because when times like these hit, I don't want to pay attention to that part of my portfolio. I don't want to stress out about this newest SPAC stock that I have in my portfolio that's down maybe 10-20%. I don't want to worry about that. I want to instead look at businesses that I believe in, that I understand, that have a proven track record, that are down maybe 5 or 10%, but I know if I put my money in, I'm gonna make that money back over time. It's just a mindset shift, to be honest. At the end of the day, it's like, everyone's attracted to things that make them quick money. Everyone wants to look for the quickest way to double their money, to 10x their money, to 100x, 1000x their money. You see these thumbnails all the time, and Like I said, my channel's also guilty of that, but what I try to do is when I do make those thumbnails, I try to actually justify that sort of valuation and not just throw it up there to hopefully have you click on it and then say, wait, what, 10x in this stock doesn't make any sense. If you go back to my videos where I talk about 10x, that kind of stuff, I try to actually have something justifying why I believe that's the case. Beyond Meat's a good example of that. That's a stock I think actually can 10x, but it's not going to happen in a week or a month or a year. It's probably going to play out over the next decade. So, hey, if you're still around in a decade, you still subscribe, which I hope you are, come back and let me know if I was right or wrong on that prediction. I guess at the end of the day, it's just, you ask yourself, how much do you value your money? Do you think that the cash you have in the stock market can easily be earned back? You're not really worried about losing all of it? Then, okay, maybe it makes sense to kind of be more risky, more speculative, where you can double, triple that money pretty quick. However, if on the flip side, you're someone that has worked hard for your money and you're like, you know what, I only have $10,000, for example, I can't afford to lose that money, but I do have a long-term time frame and I want to grow that 10,000 to like 20, 50, 100,000 over time, then what you do is you just focus on good companies because over time, that's what they do. Even the most boring stocks, I'm talking like Procter & Gamble, Johnson & Johnson, go look at those stocks, zoom out on their stock chart and just look at what the stock prices were 10, 15, 20 years ago and compare it to today. You would have made a lot of money in those stocks, even though they're boring, just by being patient and just letting time do its thing. So anyways, guys, what I really do want to stress on in this video is please be careful with your capital. Investing isn't a joke. It's not a game. It's not a casino. Some treat it that way and that's their choice, but I'm trying to be as serious as possible when it comes to my money and I want to grow it over time. Of course, I'm human too. I want to see my account 10x in a week or two, but realistically looking at probability, looking at successful investors over time, the number of them that have actually done that successfully and consistently is negligible. Which is why, I realize I'm not smarter than some of these most successful investors of all time. So what makes me think that I can go in there, 10x my money over and over and over again, and come out a multi-millionaire when they weren't able to do something like that? Just gotta weigh the pros and cons, the facts, and you'll come to a conclusion where long-term investing just makes more sense for most people. And if you're patient, you will grow your wealth over time. So guys, let's go back to the basics. Let's focus on great businesses, build our cash position. If we dip even lower here in the stock market, we're able to take advantage of that by deploying some of that cash in these good businesses. And if you're interested in what stocks I own, I disclose a lot of them on the channel, so you can watch that for free from my previous videos. But if you want to know my whole portfolio, what stocks I hold in there, what stocks I'm looking to buy, all that stuff, consider joining our VIP group, link in the description down below. Anyways, I hope this video gave you a little bit of peace of mind and actually makes you think more long-term as opposed to what's happening today or yesterday or tomorrow in the markets. Because in the grand scheme of things, guys, this is what the stock market does. It goes up, 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 little dip, oh, stock market crash, and then it recovers and goes up, up, up. So you want to just see that for what it is. These little dips are just buying opportunities over time, and long-term investors will win out in the end. Anyways, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.